Hey, welcome to the show. Today we're going to talk about whether or not a digital asset, we're actually going to use XRP in this case, can be backed by gold or another metal or something else that's precious. And we're going to break down if and when and where this is possible because this kind of comes up a lot in debate. I actually had a request to do a video on this. So let's break it down today. Hey, welcome to the show. I'm Molly. Today we're going to talk about a concept within the idea of asset-backed currencies, something we talk about a lot on this channel. I'll put some links in the description if you want to check out some of the other videos and threads related to this. But I had a request for this, and it comes up a lot. I've wondered it myself. It's this theoretical question of, could XRP be backed by gold at some date in the future? And we're going to break that down, and we're going to start with a couple of points on semantics. So the first thing is, will XRP be backed by gold? And my answer to that is I have no idea. You'd have to be a psychic, which I'm not, time traveler, which I would love to be, or you need to probably be an insider at a major central bank or a C-level at a company like Ripple to have any idea if this type of thing is in the roadmap. I'm not any of those things. So I'm just here speculating and trying to figure out what I think the future of money is. And that includes hypothesizing if and when and where certain digital assets could be connected to physical assets. It's a fascinating topic as we talk about everything being tokenized in this world, and we see what the BRICS nations are doing in terms of valuing assets like gold, silver, oil, commodities in a new way. And the idea that the way I take it is that there's a movement to move to a system where assets become money. We're going to use gold as an example because it's sort of the most timeless asset, but this applies to other things, particularly silver, diamonds, lithium. I mean, there's a whole bunch of assets that have high perceived value that could functionally be exchanged and traded as money. But to keep things simple, we're going to talk about, you could use one example, which is XRP and gold. And the question of, we already decided, do I know if this is going to happen? The answer is no. Two, could this happen? Could XRP become backed by gold at some point? Now, when I first delved into this topic, it's easy to say no, you can't retroactively back an asset after it's been minted and distributed. But I don't think that anymore. We'll get there in a second. First thing is that if you wanted to have an asset-backed currency, the easiest thing would be to mint it with that designation. So for example, let's say I had a bunch of gold coins and I wanted to have a digital asset that represented those coins specifically. I could put a little barcode or ID number on each gold coin and mint a corresponding digital asset that matches up one-to-one. The whole idea of like a perfect one-to-one poker chip where I have the money somewhere and then a representation of that money is issued via a token that can be owned and traded on the blockchain. This is what Kinesis does. This is what Pax Gold does, from my understanding. I own both of those, so I hope that is my correct understanding. And plenty of other projects that want to issue money or tokens that correspond to some physical asset, it's easiest to do that at the time when you mint them. However, when it comes to XRP, in this is my hypothesis or sort of trying to figure this out here, you have to kind of go back to some fundamental things about money. Money, and I have something I wanted to read to you guys. How do you define money? What is money? Money is a commodity accepted by general consent as a medium of economic exchange. It is the medium in which prices and values are expressed. It circulates from person to person and country to country, facilitating trade, and is the principal measure of wealth. So the most important thing in this little clip is that it's about general consent. So money is what we agree as society it is, and it has the value that we agree it has. Now, sometimes those agreements are made using an exchange, like stocks or Bitcoin, where people can go and make a bid to buy something, and if somebody's willing to sell at that price, then you have a transaction. And the more people that want to buy, it drives the price up. The more people want to sell, it drives the price down. And that is generally sort of how we look at the laws of supply and demand as affecting what we call the market price of something. Now, that is not how money is always valued, though. So back in the 20th century, the 1900s, especially after World War II, when the Bretton Woods Agreement was made, there was specific valuations determined by world governments for the US dollar. And it was determined that dollars were priced in gold at $35 an ounce. And that was the way the dollar was valued. There was no floating exchange rate. There was no sort of free market or market rate for dollars. It was set, kind of like a stable coin, like that idea, like there's no variance and fluctuation. And then related to that, a bunch of other countries decided to peg their currency to the dollar. So they would say, I don't know what they were off the top of my head, but let's say you got like 10 yen per dollar. And so that was a fixed rate and it didn't vary. So there wasn't like, I don't think there was any Forex trading back then because all of these exchange rates were fixed. So that is, again, humans got together and decided that this is how we want to value our currencies relative to one another. And there was an agreement that was made. Now that ended in the 1970s when the gold standard was done and there was no more gold window for redeeming. And the decision was made to have free floating currencies, which is the environment that we have now. And then things kind of were let to progress on their own until, of course, eventually things get out of hand and there's problems. And in 1985, we had the Plaza Accord where currencies were again revalued. And humans again came in and said, we are now going to change how these exchange rates operate, and we're going to make a new decision about the value of one relative to the other. The Swiss franc has done it. I mean, plenty of other nations over time have revalued their currency. Mexico did it not too long ago. So this idea that money is always what sort of the free market decides it is not really true. Like humans in a leadership role can come in and make laws or the equivalent to decide this is what X is worth. Now, when it comes to backing a currency with an asset, I mean, we had that for a very long time. Back in the day, people used to use gold as money. Like you'd go to a store and pay for something with a gold coin, but gold is heavy, pain in the neck. So what they ended up doing was issuing a certificate that went to that gold. Now, every piece of gold didn't have a certificate. This was done like in a sort of limited capacity. So the idea that you have to have every single asset backed by something isn't really true if you look historically back at how it was done in the past. There were a bunch of certificates and they related to a bunch of gold. It didn't relate to all the gold, and those certificates weren't the only certificates. This was just sort of a microcosm of this section of gold and these corresponding certificates. Now, we eventually saw this temptation with paper certificates, essentially the basic of kind of fiat, fractional reserve kind of stuff, where more paper certificates got issued than there were gold. I hope nobody would find out about it. It wouldn't be a big deal, but sure enough, it's a big deal one day when it becomes a big deal. And that's when we started to see problems, potential bank runs. I did a video on that yesterday. I'll put that in the description as well. But the idea is that if you wanted to connect an asset with a corresponding token, which could be a paper certificate or a digital asset, you can totally do that. Now, I'm not getting hung up on the technology of logistically how that would happen, but I could start a thing tomorrow where I've got a bunch of gold and I could tell you that every single one of you who comes to me can exchange one XRP for one thing of gold. We'll call it a gold coin. You could tell me that's dumb and that's idiotic and that why would I do that? And that's totally fair. But that doesn't mean that I can't do it. It doesn't mean that I can't set up my own exchange where I would now back some XRP with gold. And what that simply means, when something's backed, it just means it's redeemable for that asset. Now you get into these philosophical questions of like, all right, well, there's 100 billion XRP or close to there. We'll just forget about the lost and burned ones for a moment. You know, if some entity, let's just say like a random country's central bank, decided they wanted to have gold back XRP in their country, they could do that. And the thing about these markets is they could just decide that only their citizens are allowed to exchange this. I mean, who's to say they can't make that rule? I mean, they could have a KYC thing that you're only allowed to come and exchange your XRP for gold if you have a passport for this country. And you could do it if you want to make it blockchain friendly. You have an NFT that if you're an NFT holder, because you have this certain nationality, I'm now allowed to enter a DEX exchange. The password essentially, or the access card, is this NFT. And now I can participate in this private marketplace, possibly on the XRP ledger within a walled garden that would allow me to exchange my XRP for gold. Is this a good idea? But I don't know. I mean, that's not the point of this conversation. It's to figure out technically, is it possible for a digital asset like XRP to be redeemable in gold? Absolutely. All you need is some people to decide that's what they want to do. Now, does this mean that all XRP has to be done that way? No. Just because one entity says we're going to back it and redeem it, that doesn't mean they have to offer it to everyone. I mean, that's not how the sort of real world works. You can have all sorts of rules and restrictions about who is allowed to participate in this. And this is where, as we've looked at things like Project Iron and Project Guardian, sort of these initiatives to measure or to test whether or not the financial markets can move to the blockchain. I mean, the Project Guardian one was for institutional bond traders in Singapore to trade bonds using a DEX, a decentralized exchange, a DeFi exchange, basically. And not everybody can go in there and do that. Like, I'm not an institutional bond trader. I can't go into this thing and trade. So again, there would be some kind of mechanism. My guess is it's an NFT that allows you access into this walled garden where you could participate in this financial market. I don't see why you couldn't have a similar offering for an asset-backed arrangement. I mean, if BRICS launches their reserve currency that's asset-backed, which means each country in the BRICS coalition would have a bunch of stuff, oil, gold, whatever. They'd make their little pile of stuff, and then they would be issued a bunch of tokens that correspond to the value of that stuff. Then they could exchange it with each other when they do global trade. That's going to be a walled garden. Like, there's no way that I'm going to be able to get into the exchange that the BRICS nations are trading with each other. It doesn't have to be. It's sort of this idea of wholesale CBDCs, even, or wholesale central bank tokens, where only certain entities are allowed to do that. And so with this idea of XRP being gold backed, yes, it's totally possible, especially when you think about the fact that a small group could do it to exchange with another small group. The XRP has the value that the people trading it agree it has. Now, if you go to an exchange like Uphold or MEX Global, and there's a current market value of XRP, that's just because that's what the buyers and sellers on that exchange are willing to pay. That's not the fair market value. I have a video on that too if you want to watch that in the description. That is just simply what those people on that exchange are willing to pay at that time. Now, if those people were willing to pay a lot and there's another exchange where people are willing to pay less, I could be an arbitrager and go and do that thing. But that only works if I have access to both of those exchanges. And that XRP has utility within the people, for the people who can access those exchanges, AKA not central banks, not institutional traders. Those people are not on Uphold. I don't think. I'm totally making that assumption, but I'm pretty confident in that assumption. That central banks are not using Uphold for trade deals. What they could do is create their own private garden and say, you know what, I want to sell you a bunch of oil, and this oil is worth, let's price it in gold. It's worth a pound of gold. And they say, okay, well, I got to pay you. I can't pay you in physical gold, so I don't want to do that. So we're going to decide, we're going to agree that in this exchange, XRP is worth a pound of gold, whatever. And then you pay me the XRP and I hold it. And then the next time I go buy something else, I have to buy a pound of gold's worth of lithium. I can pay that other person 1 XRP. So this idea that XRP has to have the same value everywhere, I think is naive, because not everyone can participate in every exchange. So it could be 50 cents in one context, but if there's a walled garden where we want to trade and we're just simply using XRP to transfer value, that value can be whatever we agree it is. It doesn't have to be what is on some exchange that retail investors are using. Now, you could say, again, we got this great arbitrage opportunity, but again, the people in this walled garden, they're not trading XRP as like a speculative like investment. They're using it to make a payment. And if everyone in this walled garden agrees that this asset has this value, then guess what? The asset has that value and it can be used to transfer what I owe you to the person I need to send it to. So I realize this is kind of conceptual and theoretical, but when it comes to this concept of assets and currencies, just realize that this whole world is based on agreements between people. Now that those agreements can get programmed into software if people choose to do that, but you can also create your own microcosm environment where an asset can be represented on a blockchain and have a value that you and I, as participants in this walled garden, agree that it has. It doesn't have to be a universal value. This is why there's trading in the OTC markets that doesn't correspond to what we see on some exchanges, because these deals are being made between groups who are making deals to exchange value that have nothing to do with us. And it's not simply this kind of universally perceived asset. I hope I'm making sense here. But yes, I do think XRP or any digital asset could be backed by a physical asset at a set price should the participants in this market, which in this case would probably be a smaller market, if they agree to this and they decide this is what they want to do, they can absolutely do it. Now, if we found out, hey, guess what? China and Russia are trading gold and they're using XRP, and in their world, XRP is worth 50K, that kind of sucks for us because we're not allowed into that walled garden. So I can't take the XRP that I bought for 35 cents and go sell it there because I can't get into that exchange. It's not available to me. And so this is why the blockchain technology, I think, is very cool, because you can have this very large blockchain, which is kind of like a highway system, right? But there could be a toll road that only people with the right toll sticker thing can get onto. Otherwise, you're not allowed to drive on that road. And so the road's still the same. The road still works. The road was well built, but that doesn't mean that everyone gets to access every part of the highway system. There can be tolled roads. You can have private high roll. Like if you think of this as a giant casino, there's the high roller room that only certain people are allowed into. And there may be assets traded in that high roller room that have a different valuation than otherwise, simply because it's an agreement between people. This is what we want to trade it at. So I got a little fired up in this. Sorry. All right. So that's my take on whether or not gold could be backed by gold. Sorry, whether XRP could be backed by gold. Do I think it will be? I have no idea. I'm not going to likely be one of these people making a walled garden agreement because I'm not a central bank or a country, but you could do it because the value of money is simply an agreement between people. And you and I could agree tomorrow that XRP is worth $1 million and I could pay you that and you could give me the $1 million for my one XRP. Like, who says we can't do that? Of course you can. Do you think it's smart or logical or makes sense? Maybe not, but that's not the point here. We're trying to figure out, could it be done? Yes, of course it could. So, all right, if you like the video, please like, subscribe to the channel, and we'll see you in the next one.